If you have been trading for any length of time, you must have realized by now that losing is so much part of trading. So in this video, I'm going to explain the 6 secrets on how to embrace losing as a Forex trader. So for that and more, watch the rest of the video. All right, great. So you're going to realize that losing is so much part of trading, right? And unfortunately, nothing in the whole world prepares us on how to lose. No one teaches us how we are supposed to embrace losses and all that. So in this video, I'm going to dive in and give you six secrets that's going to help you become a good loser so that you don't let losing trades affect you. All right, so let's get started right now. So losing is an inevitable part of trading, and embracing losses is an element and is an essential element that every trader must develop. So here we're going to talk about the six important secrets right here. It's very important for you to be aware about these things that I'm going to talk about, because if you're not going to be aware of this and you won't take advantage of this, you are going to be affected every time you're taking losses. So number one, the market is always random. The market works in terms of probability. So we have to understand that the nature of the market is about probability. So trading is all about probability, and even the most successful traders will have losing trade, and accepting that losing is part of trading, and understanding that no one can predict the market 100% of the time will help you cope with the losing trades. So unfortunately, most traders come with a concept coming from social media, what they see on our social media platforms, where they just show you winning trades, winning trades, winning trade, and they don't get to show you the losing trades. You come with a mindset that you are going to win all the time, right? And then when you start trading, you quickly realize that that's not the case. So really we really have to come to the market with the right mindset, and when we think about it in terms of probability, it means that at any particular time we take a trade, anything can happen. So if you look at this diagram right here, this is a probability of having a consecutive losses in a row within 100 trades. So for example, let's say your strategy is a 55% win rate strategy. So if you look here, this is the win rate and this is the number of consecutive losses you can have in a row. So if you have a 55% strategy, there is a 99% chance that you might have 3 losses in a row. There's an 86 chance that you're going to have 4 losses in a row. There's going to be a 58 chance of you having 5 losses in a row, and there's going to be 31% chance of you having 6 losses in a row, and it goes on and on right there. So the higher the win rate, of course, the less the number of consecutive losses, and the lower the win rate, the higher the number of losses that you can expect in a row. So and at the end of the day, we have no control over what's going to happen. We don't know in which series we are going to expect these losses or wins to come. So it's all about having the confidence to execute your strategy regardless of the previous outcome, because you understand at the most basic level that you don't know what's going to happen and it's not within our control. So what we can control is the thought process. I mean, it's our thought process, our edge identification, our predefining our risk. And once we take the trade, we are no longer responsible. We no longer have control over that. So we have to make sure that we only focus on what we can control and let go of what we can't control. Ultimately, it's all probability. No matter how good the strategy is, there's no way for you to know what's going to happen next. So when you have that probabilistic mindset, you're going to make sure you're going to understand that, and it's also going to actually help you understand that losing can happen at any particular time. And when you expect losses, it's going to be very easy for your mind to actually cope with that. All right, so it's very important. So that's the secret number one. It's all probability, and there's no way to know what's going to happen next. All right, so let's move on to the next. Number two, keeping a trading journal. So keeping a trading journal is a great way to track your trades and analyze your performance. This will help you identify your strengths and weaknesses and make improvements to your trading strategy. You guys, what is not measured cannot be changed. So it's important for us to keep a detailed journal of the trades we are taking, the screenshots, why we took those particular trades, the entry signals, and all that. We need to be able to record all that. That time we took those trades and everything, the risks that we used, all that has to be kept in a journal so that when the time comes for you to review your trades, you have data that shows you exactly what you were doing. So if you can't measure it, you can't change it, right? There's no you're going to improve if you can't measure whatever you are doing. So it's important for us to keep a detailed journal. Make sure that we are recording all our trades that we are taking. I know it can be tedious, but it has to be done. So make sure that you're recording all your trades. Um, you're taking the screenshot so that when it comes for you to actually review your trade, you'll be able to look back and say, okay, here, this is the mistake I made right here. I entered too early, or I used a bigger lot size on this particular trade because I got greedy and all that. So in order for you to be able to change that, you need to be able to look at it later on, because in the moment you might have a lot of emotions and you might be able to do things that are not in your trading plan, right? So it's important for you to keep a detailed journal so that you're able to evaluate your processes so that you can improve. If you don't evaluate whatever you're doing, it's very difficult for you to improve. But if you can look back and notice where you were making mistakes, it's easier for you to actually correct those mistakes and get better. We only do that, can only be able to improve if we journal our trades, our emotions, and all that, so that we can improve as we are going on. Otherwise, if you're not going to measure your progress, you're not going to make it, because everything's going to just to be randomness, right? So make sure that we find a trading journal that's going to actually help us in our in our M&F mastery course. We asked that how we provide a trading journal that actually encourages all our traders to actually use, so that you're able to track yourself and track your progress and all that. All right, so let's go to the next. Manage your risk. So managing your risk is crucial in forex trading, and by using proper risk management techniques such as setting up a stop loss orders and also not risking more than 0.25 to 1% of your account per trade, you can limit your losses and minimize the impact of the trades. Very, very important for us to be able to use proper risk management. If we don't use proper risk management in our trading, we are not going to make it long term, because we are only one trade away from blowing our account. That's the trick part about trading. You can be winning all the trades, but if you're using poor risk management, it will just take one trade to wipe out your whole account, and no one wants that. So in order for us to survive the long term, in order for us to still be there years after years, we have to make sure that we are predefining our risk. It's one of those things that we have control over. We don't have control over outcome, but we have control over what lot size we're supposed to use, what position size are we supposed to use. By making sure that we are always using a position size calculator, making sure that you know exactly how much you're risking on that individual trade and be consistent with that. We always have to make sure that we know exactly how much we are risking, and we are supposed to internalize and really accept that risk, such that even if you took that loss, you're still going to be okay. All right, so it's very important for you and I to actually predefine our risks every time we take a trade. Let's not assume that this trade looks too good, it might just win, so let me just use a bigger lot size. Remember, it's all about probability, and we have no way of knowing which trade is going to win. So you just have to ask yourself, how much am I willing to find out if this trade, how much am I willing to lose in order to find out if this trade is going to be a winner? So that's your risk. Make sure that it's at least between 0.25 to 1%, especially if you're trading with prop firms. It's very important that you keep your risk parameters very low, so that you avoid violating the rules of these prop firms. Very, very important that even your own capital, don't risk more than 5% a trade, that's unrealistic because there'll be times when you have 5, 6 losses in a row, and if you're risking 2%, that's a lot. But if you're risking 0.25%, even if you took 4 losses, that's going to be just 1%, and it's going to keep you in the long run. All right. So it's very, very important because you can't make it in this industry without proper risk management. All right. So it's very, very important. Okay. So let's go. The next one here. The next one here is learn from your losses. So every losing trade is an opportunity to learn and improve your trading skills. Analyze your trades to identify what went wrong and how you can avoid making the same mistake in the future. They say insanity is doing the same thing over and over while expecting a different outcome. So, if you're not learning from your mistakes, you are going to keep on doing the same thing. If you're not reviewing your previous traders, like we've talked about in terms of reviewing, generating your trades, you are going to keep making the same mistakes over and over. And the only way to avoid doing that is by making sure that we are reviewing our trades. We are learning from our losses so that we understand what happened. If, for example, if your stop loss was too close, identify that and make sure that you implement it next time so that you avoid doing that. All right. So if you use the bigger lot size last time, you remember that in the next trade you're supposed to predefine your risk so that you avoid making the same mistakes over and over. All right. So if you can only learn from our mistakes and we can actually get better, actually we learn more from losses than successes, right? So we always have to make sure that we sit down when you lose. When you lose, don't just immediately get up. Sit down, understand why you lost, and then get up because now you're going to learn and that'll be different. However, if you just if you do take a loss and then just get up without actually understanding why you lost, you are more likely to actually encounter the same situation and you're going to lose again. So in order for us to avoid losing consecutively, losing consistently, we have to learn from the losses. We need to learn why we lost, and then we can get better. And we can only do that if we are recording our trades, we are journaling our trades. And that's the only way we're going to be able to actually learn from our losses so that we can get better and become consistently profitable traders that you want to become. So, the fifth secret right here is focusing on the long term. So, Forex trading is a marathon, it's not a sprint. Focusing on the long term and not getting too caught up in the short term fluctuations of the market will help you to maintain a balanced perspective and avoid making emotional decisions. So, like as earlier stated, most of us come to trading from a perspective of social media, right? Because in if you look at Facebook right now, Instagram, you're going to see people flexing, showing you how much money they've made, how much they've flipped their account, how much they're doing all that. And most of the time that's not even true because they're just trying to lure you into their you buying their courses, buying their signals and all that. So people usually come with that get rich quick mindset where they think they're going to make money right now. I mean, if you've been trading for any time, you're going to realize you must have realized that it's not even true, right? Trading takes time. You need to put in work. You need to put in time, right? So that you master the skill. When you master the skill, then the outcomes are going to take care of themselves. So it's a long-term game. You're supposed to have a long-term mindset where you focus on a series of trades so that because in the moment, if you take 3, 4, 5 trades, in those particular moments, anything can happen. You can have 5 losses in a row, or you can have 5 wins in a row. You can have 3 wins and 2 losses. Anything can happen in the short term, right? But if you focus on the long term, while having a positive edge, an edge that has been proven to be profitable over time, then you are guaranteed to be profitable in the long run, and you won't be affected by small losses because you understand that losses are going to come and they're going to be part of the game. So it's for you to actually accept the losses and be able to actually take trades regardless of the outcome. As long as you have a positive expectancy in the market, of course, you must have make sure you have to make sure that your age gives you at least more than 1 to 3 risk reward ratio, so that if you no matter how many losses you take, you're still going to be profitable, because one trade can cover up to, let's say, 5 losses, 6 losses, meaning you don't have to be scared of taking a trade, because it just takes one good winning trade to actually cover up to maybe 3, 4, 5, 7 losses, and like that you have an edge and you'll be able to survive in the long run. So have a long-term mindset, and you understand that a proper profitable age doesn't it's not just a straight line. It's made up of highs and lows, just like that. That's how it is. So you're going to expect those fluctuations, and those fluctuations are a representation of you having losses. But if you take care of the losses, make sure that the losses are small and the wins are big, you are going to be profitable. So make sure that you have a long-term mindset. It's really, really important. Don't be caught up in the short-term fluctuation of the market, because that's going to keep you stressed and emotional. And you have to avoid all that. It's really, really important for us to have that shift of mindset. Very, very, very important. Okay. So the sixth one here is maintaining a positive attitude right here. So maintaining a positive attitude and keeping a level head during losing streak is critical. So staying focused, staying disciplined and confident in your trading strategy will help you bounce back from the losses and continue to make progress as a trader. So the confidence to be able to execute your strategy regardless of the outcome of the previous trade is really, really, really important. And that confidence only comes through having proven that your strategy works. That takes you back testing, forward testing, and live trading for some time. And it must have shown you that that strategy works. And when you have that data, it will be easier for you to execute your strategy regardless of the outcome. However, most people don't have the confidence in their strategy, and most of the time whenever they encounter 3, 4, 5 losses in a row, they're already thinking about changing a strategy. But they think that there's a strategy out there that has a holy grail, that is a holy grail that doesn't lose. Unfortunately, I'm sorry to burst your bubble, there's no holy grail. The holy grail that you're looking for is within you. It's your mindset. You have to have a long-term mindset. You need to be able to embrace these losses, because losses are inevitable in the market. Like, you can't control and you don't know when they're going to hit you. You can have strings of losses. You have to be able to handle those losses, because if you don't handle those losses, just one trade can really, really rip you apart and make you blow your account and you'll be done. And no one would love to actually go through such. So it's important for us to prepare for those losses, so that we are not affected as much when we encounter them, because losing streaks are going to come, losing trades are going to come. However, what's going to determine whether we make it during those losing streaks is how we handle the losses. Winning is easy. Winning is easy because you don't have to do much. But losing takes really, really you having an understanding and having that mental strength for you to actually be able to handle them. And especially if you're having unrealistic expectations, they can really, really be they can be bad, such that you can even have emotional pain, which is really unnecessary, because you have to understand that it's all probability. The losses are going to come, the wins are going to come. However, if you have a positive edge with good risk reward ratio like we do, don't really have to worry about taking 5 losses in a row, because our average risk reward ratio is like 1 to 10, and we just need one trade to cover all that. So we don't have to worry about that. So now, for you to do that, you need to have the confidence in your strategy in order to be able to execute your age flawlessly without errors and all that. It's very, very, very important. So make sure that you find a strategy that is profitable and that has been proven to be profitable and over time, and be confident in your strategy. So regardless if you are facing a losing streak, you have to be able to execute your age flawlessly, and that's what's going to keep you in the game, and that's what's going to separate you from the 95% that lose consistently. All right. So remember, losing trades are a natural part of forex trading, and how you respond to them will determine your success as a trader. By embracing losses and learning from them, you can develop resiliency and skills that are needed to become a profitable trader in the long run. So that's how it is. Make sure you learn from the losses. Make sure that you are prepared to handle the losses, because the losses are going to come. You have to have the belief through your strategies that if you continue to execute that strategy, you're going to make money regardless of the previous outcome of that particular trade. You have to have that belief, and that belief comes through backtesting, forward testing, and live trading that strategy, putting in work thousands of hours proving that that strategy works. And once you have that figured out, spend 95% of your time working on your mindset, because that's one thing that's going to separate you from the 95%. So, very, very important. Always remember, assume you are wrong until proven right whenever you're taking a trade. And guess what? Expect to be uncomfortable, because trading can really be uncomfortable. So when you expect it, it's going to have a lesser effect. All right. So this is very, very important. Remember, trading psychology is very, very important when it comes to to becoming a consistently profitable trader. However, if you don't have a strategy that has been proven to work over time, no matter how good you are in terms of managing your emotions, you will not make it. So there's a place for trading psychology, and there's a place for having a profitable system, and you need to have both. So if you don't have a proper trading strategy, you've been struggling, you've been losing money over time, you need a profitable strategy that has worked over time. So the first thing in the description gives you access to our M&F mastery course, which comes with lifetime mentorship, lifetime signals, and all that. So check this link in the description. You actually get involved right now. So you guys, until next time, I hope you found value in this video. You guys, until next time, goodbye.